Well, hello, everyone. Cynthia Tomaine here with Interactive Brokers, and thank you for joining today's webinar being brought to us by Nasdaq. Today's event is going to be talking about the reduced value and increased options that are available with the Nasdaq-100 NQX Index Options. So with that, I'd like to bring on Dan Kerrigan. Dan, who is going to be delivering today's webinar, is with the Nasdaq Options team, and we'll be discussing the Nasdaq-100 NQX Options. So Dan, I'm going to pass the presenter controls over to you. Let's get underway, and thank you for joining us today.
Thank you, Cynthia, and greetings to all Interactive Brokers clients. Welcome to today's exclusive and world debut webinar from Nasdaq. Good things come in 1/5 packages. Introducing Nasdaq-100 Reduced-Value NQX Index Options. Based out of the Nasdaq PhilX Options Exchange in the heart of Philadelphia, this webinar was developed to educate and inform investors about Nasdaq options offerings and initiatives. Now, just to provide a timing expectation for your schedule, in less than 30 minutes, you'll have a full picture of how the new Nasdaq-100 Reduced Value NQX Options product is constructed and how it might help your portfolio. But keep in mind, you can always come back, as Cynthia said, and see a replay once you receive a follow-up email from Interactive Brokers. And along the way, please feel free to submit any questions in the chat box. Well, first up, just to start with the options disclosure statement. It's important to note that any strategies discussed today, including examples using actual securities and price data, are strictly for illustrative and education purposes and are not to be construed as an endorsement, recommendation, or solicitation to buy or sell securities. Thank you for your review. So today's agenda is focused on an asset class many of us already trade, index options. But another way to view this asset class is something common to all investors and traders. That is the cost of ensuring notional portfolio value. In Nasdaq, we believe one index size doesn't fit all portfolios. So we believe a new product that offers optionality in terms of managing underlying position size makes a lot of sense. So let's begin with a review of the Nasdaq-100 Index and its unique features as the bellwether index for large cap growth stocks. The Nasdaq-100 For example, Facebook, Apple, Amazon, Netflix, and the two alphabet tracking stocks. In totality, the FANG stocks make up roughly 37% index weighting of the Nasdaq-100. But as you shift your eyes over to the right side of your screen, looking at industry breakdown, you'll find that sure, technology is a heavily weighted group here, just shy of 57%. And of course, consumer services just shy of 25%. But you might be surprised to see healthcare has a decent weighting of just less than 10%. So it's clear to see Nasdaq-100 Index is a broad-based index. Well, let's take a look at the actual chart of the Nasdaq-100. As you can see, recent price history shows a price level of about 7,000, certainly a lot of ups and downs since the beginning of the year. But what's important for today's webinar with regard to options trading is that with an options contract with a $100 multiplier, that represents $700,000 of notional portfolio value coverage. So again, NDX, $100 multiplier times 7,000, $700,000 of portfolio coverage. And that compares and contrasts with what we're introducing today, which is the Nasdaq-100 Reduced Value Index, which goes by the trading symbol of NQX. So you can see in terms of recent price history, it's at a level of roughly 1,430. So for an options contract with a $100 multiplier, that represents $143,000 of notional portfolio value, or essentially 80% less than the coverage that would be afforded by NDX options. So moving on to today's introduction of NQX options, we're pleased to provide this type of new trading optionality for investors and traders alike. And the product is one that has a lot of common characteristics of options that you already know and use as a trader or investor today. For example, the multiplier on the index for options is $100, as we just mentioned. For NQX options, they are PM expiry, European style, means no early exercise issue assigned with American style, and they're cash settled. For trading tick increments below $3, minimum increment is only 5 cents, equal to $5. And of course, option premium above $3, minimum tick is 10 cents, equal to $10. Now, it's important in terms of takeaway today to note that NQX is a broad-based index, and hence it qualifies for Section 1256 tax advantages, no different than NDX options. But of course, in any tax situation, we encourage you to consult with your tax advisor. But in terms of takeaway today, the NQX index is again 1/5 the size of the full value Nasdaq 100 index options. And we have a number of expiries available for trading and more coming. Specifically, we have available for trading today on the Interactive Brokers platform monthly options with July out to December of 2018. And these options are monthly options. They're the third Friday of the month, but they're PM settled. And that's an important takeaway also. These are PM, not AM settled. But coming up on July 19th, we will introduce weekly options, something that is obviously highly common and popular with many investors and traders today. And these weekly options will also be Friday PM settled. As you can see from the expiration dates, we'll start with July 27th and then provide each Friday in August a weekly listing out to the end of August, as you can see. So Interactive Brokers makes available for trading today NQX options just by inputting the symbol NQX. And you'll see the monthlies, but soon, as of next Thursday, you'll see the weeklies as well. So let's dive into a trading strategy to try and put together maybe some commonality with your approach for options trading as it results in different ideas for trade setups. And with regard to any trading strategy that we have, when we look at things, we come to a conclusion that there are 4 pillars to any options trading strategy. First is, what's your view on the direction of the underlying? Do you think the index will strengthen or weaken? How much of a direction do you think will take place? Do you have a target price in mind? Or do you have a percent move that's in mind? And what's your time horizon? Do you count trading activity in terms of your portfolio needs in days, weeks, or months? And then, of course, importantly, what is your view on volatility over that time frame? Do you see it increasing or decreasing? Well, in terms of setting up today's NQX example options trade, we provide a scenario where after a year in which we've seen equities rally considerably since the starting gates of in January, is that we're looking at now at about the mid-year term of a potential weakness in large cap growth stocks. So in terms of how much, we're essentially putting a trade idea together of a 15% decline from current levels of NQX, again at 1430, to the low 1200s. And in terms of time frame, we're basically looking at placing this trade for the remainder of the year into December, so a little more than 5 months. And with regard to a view on volatility, probably a slight increase over current levels, but not a radical increase. So the strategy that we have chosen today is to execute an NQX bear call spread. And this is a simultaneous purchase of a high NQX call strike and selling of a low call strike on the Interactive Brokers platform. Now, the risk characteristics of a bear call spread are such that the risk is limited to the numerical difference between the strikes But then you need to add back in the credit that you received for selling this call spread. And then, of course, you have to take into account brokerage commissions. Now, bear call spreads have a lot of optionality in and of themselves. Depending on where you place them, whether they are in, at, or out of the money, they can have a kind of a moderate or a very bearish outlook. But at the end of the day, the leverage by this strategy is always going to be bounded by the strike range of the lower and higher strike. But importantly, from your perspective as a trader and portfolio manager, your break even at expiry, it's going to be the low strike price plus the credit received less brokerage commissions. Now, in terms of any type of option strategy, there's always going to be a best case and a worst case scenario. The best case scenario in terms of a bear call spread is that the underlying index moves below the low strike. But of course, on the flip side of that, the worst case scenario is that the underlying index, NQX, moves above the high strike. So let's dive into the strategy a little bit more and try and put it into a picture of what will actually be executed on the Interactive Brokers platform. So in this example of the NQX bear call spread, we look at the spot index on June 29th at around 1430. We decide to have essentially what I would call deep in the money. It's moderately in the money, but let's call it definitely in the money call spread. So we're going to look at selling the December 2018 1300-1400 call spread. So what does that entail? Simultaneously on that Interactive Brokers platform, you can enter an order to sell the 1300 call and at the same time buy the 1400 call for a spread differential credit that you determine. In this case, the trade outcome affords us 78.10 points of a net credit. So at the end of the day, we basically have a position in our Interactive Brokers account of a short December 1300-1400 call spread and a 78.10 net credit. And of course, important to note, with any type of credit spread, it's consistent, is that the long call, which has a higher strike, will always cost less than received for the short strike, which is lower. But in terms of where this trade goes from here, it's obviously a function of the market, where we are today, where we're going now until the end of December. So let's look at in terms of the maximum profit and maximum loss scenario. So we mentioned in a couple slides earlier that our break-even point would be equal to the lower strike plus the net credit received. So in that case, the lower strike being 1300, we're going to add on the $78.10 credit. And that puts us to a break-even price of 1378.10. So just to take kind of a quick recheck of where we got into this trade, we looked at the index at the end of June, and it was at 1430. So selling a deep in the money call, and we're actually buying an in the money call, yields us a pretty fat premium here. But does it give us any comfort that we don't have risk? And that answer is no. In any trading scenario, we obviously are able to look at a maximum profit and a maximum loss. So let's do that now. We've clearly established the break-even price at 1378.10. So moving from left to right, as mentioned, the best outcome for this trade is that the market does indeed trade below 1300. And that would yield us the ability to keep that full initial credit of $78.10, again, times a $100 multiplier, or $7,810. Of course, have to deduct brokerage commissions at the end of the day. But as we move higher in the marketplace from 1300 and going through our break-even price at 1378.10, the trade is now indeed going to incur a loss. Let's say the market at the end of the year continues its bull run, and it actually finishes above 1400. It's at that point now we're looking at a maximum loss. Of course, the high strike minus our break even, coming out to a maximum loss of 21.90 points, or times $100, $2,190. So in terms of risk reward, this trade is only good as to what you assign to your risk appetite but it gives you an example of the dollars at play with the reduced value index that is 80% less in value than the Nasdaq-100 NDX index. Now, in terms of strategies, this is just one that we chose off the shelf, one that provides a view in terms of the functionality of Interactive Brokers platform and also the ability of Nasdaq to deliver complex order functionality. But in terms of any trading example, let's go back to the 4 pillars. How does this trade look in terms of where we're going forward? Now, we initially said that we're looking for maybe a 15% break in the market between now and the end of the year. And we know that as the market goes down, both the long and short calls will decrease in value as the spot index declines. But the interesting part here is that when you put on this hypothetical trade at an index level of 1430, the break-even price for the index decline is about 4%. But to get the maximum profit, you still need to see a market decline of almost 10%. So from a risk appetite perspective, it's got to be one from your decision as to whether this accomplishes your goal in terms of hedging your portfolio with notional value. And just as a reminder, with index level at 1430 with a $100 multiplier, it underlies a portfolio notional value of 143,000. So these metrics are definitely important to note, and it's also, again, great consideration if you're looking for a hedging opportunity in a smaller index size, hence the idea of today's introduction of reduced value NQX index options. Well, with any trade, we know that we're going to have risk and reward. And certainly with call spreads, put spreads, what have you, is that there is limited profit potential because you have a higher strike, which is going to offset your lower strike. The good news is that that also reduces your risk, and that's capped. But that's only capped to the extent that your risk capital is deployed from your trading account and can withstand this trading strategy. So today's example gives you a look-see at a common trading strategy. But how about from your perspective as a trader or an investor, other strategies that you might have in play? Well, NQX will allow you to be able to execute those same strategies for your trading or investment portfolio needs, no different than what you use with under index options. For example, Nasdaq-100 full value NDX options. So you might have a different view. You may indeed not be bearish. You could implement a bull call spread on this point. You could implement a put vertical. And of course, you have the wherewithal to implement ratio calls or put spreads. The Interactive Brokers trading platform allows you to execute some of the most complex option order functionality in place. Calendar call spreads, put spreads, butterflies, and of course, iron condors. Nasdaq allows complex orders up to 10 legs. So NQX options not only give you optionality in terms of the size of the contract being 80% less than NDX, but they allow you to fit hand in glove those exact same strategies that you use today for index options. So essentially, Nasdaq has extended your toolkit for another index option that might be appropriate for those occasions where you might have a view but not have a 100% view, and you want to put on something that might be smaller in terms of your risk appetite. But does that risk appetite have a parallel that can be quantified? And that answer is yes. So what we like to say in terms of going to essentially a summary is we like to say, what's in your wallet when it comes to trading? You have different choices. Using the full value NDX options product or the reduced value NQX options product. Obviously, you can choose your contract size. So just focusing your eyes in the center of the screen where it says reduced value NDX options, it shows again the maximum profit of $7,810. It also shows that maximum loss of $2,190. Well, if you had executed this exact same trade in NDX, your maximum profit would have zoomed to $39,050. But look what happens when you also examine the maximum loss. It's increased by a factor of 5 to $10,950. So NQX Options may allow you the opportunity to express your views on the Nasdaq 100, or maybe more targeted in your view of the FANG stocks with a reduced maximum profit profile and a maximum loss profile. And of course, some of those trades may be used against positions you may hold in E-mini Nasdaq 100 futures. Same underlying index, ability to hedge in terms of having more optionality. But as I've been going along in the webinar, there's been a couple questions that come in. So I think now would be the time to take a quick look at some of the questions that come in. And first of all, the first question is, as NQX is a new options product, how is the liquidity? That's a great question. Thank you for that. And the answer is that there are 4 market makers actively streaming continuous two-sided quotes into the Nasdaq options platform. So you can simply check out on the IB platform, just like any other option, in terms of looking at the bid ask and any strike. And of course, you control the decision making for your trades. So feel free, you have the wherewithal to split bid ask or enter it at any point in time. So another question that's come in is, what happens if the index ends up in the middle between the low and high strike on the day of expiration? Great question, and I wish I would have covered that a little bit earlier. But these indexes, index options rather, are cash settled, and they are automatic exercise being European. So it will be a difference between your net credit and where the index finally settles with relation to your in the money and out of the money option. So the short answer is that it's your credit versus where the final index strike is relation to the in the money strike. But if the question is, do I have to exercise or anything? The answer is no. The outcome for a trading strategy for automatic exercise, European settle, is the same as all other European style indexes. Just scrolling through here, in terms of coming through, will the NQX final settlement price be the same as the final settlement price as NDX options? Well, another very good question. It's important to focus on today's takeaway with the contract specification is that NQX options are PM settled on Fridays. Each day, Nasdaq produces a closing settlement price for the Nasdaq 100. Does that for every day for Nasdaq 100 options. That's what they're marked against. So the answer is essentially yes, but it will be the end of day price. And it will also be, once again, NQX is 1/5 the price of the Nasdaq 100. So at the end of the day, there is no differentiation between NDX and NQX except by the sheer math formula that NQX is 1/5 the price. I'm just taking a look here. Some more questions have come in. Thank you for the phone. I'm just clicking through to make sure I've got them. A couple more. Another question's come in is can the same trading strategies used with NDX options be used with NQX options? And the answer is absolutely. This is a product made for complex order strategies that are used by traders today, both retail and institutional alike. Whether you are a time capture option spreader looking to trade calendar spreads, selling the front month, buying the back month, have the ability to do this as well. Any type of butterflies, really the imagination is left up to you. But the Interactive Brokers platform affords a wealth of complex order functionality, which is limited to 10 inputs. So as I just scan a little bit, looking, just to see if a couple more questions come in, just scrolling in. So another question is, what delta should we consider for the short strike? Another great question. Fortunately, the Interactive Brokers platform provides you a real-time market delta and all the Greeks, which you have the optionality to click on for an expanded view for Delta, Gamma, and Vega. But the IB platform shows you the ability to look at the deltas. The question with regard to Delta in this example is that this is a deep in the money call, so the delta was extremely high. And that's another important consideration point today, is that your view in terms of leverage is definitely going to be controlled by delta. Do you want a high delta strategy or a low delta strategy? This one was really put into play with a high delta strategy to basically give you a look-see that you can essentially replicate the index with different strategies. But of course, your risk profile may not suit today's hypothetical example. May be better suited for a lower delta strategy, maybe something like a 25 delta call on the downside and one that's out of the money on the upside. But of course, those scenarios then will flip the risk reward. You'll have greater risk and less reward. But again, depends on your pillars of strategies for setting up an options trade. I'm looking for a few more questions. It's coming in here. What are the hours for trading? Regular hours for trading each day, 9:30 to 4:15 on the IB platform. Just coming into point. So there's a question that has also come in is, what is the real liquidity of NQX Options as a startup product? So it's a little bit different in terms of, how is the options liquidity? Liquidity is essentially a quote-driven marketplace by market makers, but they're providing indicative quotes. So you as the customer still have the final arbiter on pricing your option for the price that you want to achieve, which may mean splitting the bid offer, going inside the best offer, going inside the best bid. That's essentially up to you. The market makers respond to orders in the marketplace. And as we are a new product today, we are proud to debut NQX Options with interactive brokers. And our goal is to increase interest in this product line for the reasons that were put forth earlier, that the risk profile of NQX Options is 80% less than NDX Options. But of course, that also means the profit potential is also reduced. The key idea here is, what notional portfolio value are you seeking to hedge? If it's less than a full value NDX option of around 700,000, and it's in a component maybe half that, that would allow you to utilize in an efficient way NQX Options to provide that type of hedging treatment, especially around earnings opportunities. So looking at a few more of the questions that are coming in here, just to find a little bit more coming in. Thank you. So question is at open interest, where are we right now? We just began. Just a week ago, products have started. So we're expecting to grow volume and open interest. Very fair question. Our efforts are to begin with product education and to deliver the opportunity of a smaller contract available for investors, retail and institutional alike. So today marks the first educational outreach for NQX Options. We have a series of additional webinars that we will be presenting over the coming weeks and months. But we want to ensure that you get answers to your questions. So at any point in time, you obviously have the means to ask questions of the great team at Interactive Brokers. But also, we invite you to send any email inquiries you might have to sales@nasdaq.com. We have a group of about 20 professionals who monitor this inbox on a daily basis, so you will get a reply. We obviously cannot help you with specific advice on trading strategies, but we can definitely field questions about concerns that you might have about what type of complex orders can be placed, how to go about placing different views in terms of over time. Happy to work through different scenarios with you in terms of providing a view of how NQX Options might help you in your trading portfolio. So at this point, I just want to take a quick look, and I see that we've been able to address many of the questions that have come in. And just to keep on our timeline of 30 minutes, I want to bring everything to a conclusion that all of us at NASDAQ are extremely proud to have been able to debut today for the first time a webinar for our brand new NQX options in tandem with interactive brokers. So as we go forward, we wish you good luck and good trading, and please don't hesitate to follow up with any questions at sales@nasdaq.com. Thank you for your time invested in NASDAQ new products today, and thank you for taking a look at NQX options. So Cynthia, I'll turn it back to you. Thank you to all.
Well, Dan, thank you so much for today's presentation and the introduction to the NQX options. I do want to remind everyone we have been recording today's event, and you'll all get a direct link to today's follow-up later on this afternoon. So do watch your email. So with that, we are going to conclude our session for today. Thanks, everyone, for joining. We do appreciate the time you spent with us, and have a great rest of your day. You can exit using the X in the upper right-hand corner of the screen. Thanks again.